Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for June 7th, 2010. Here we have a chart of the Dow 30 ETF, DIA. Had a breakdown on Friday of last week from a flag pattern in a longer term downward trend. That's an indication that we will probably go lower in the next little while. We do have some support right there, which has held up in the past, and we'll see if that can hold up again. So we could see a bounce in the next couple of days, but I am concerned that this is just the beginning of a more significant downward leg, and therefore I would be very cautious with owning stocks and look for opportunities trading some of the inverse leveraged ETFs that are available to investors. The Canadian dollar has also fallen over the last couple of days, but really does not have as negative a chart as the US equity indexes do. The Canadian dollar and the US dollar are really the stronger currencies in the world right now, but the US dollar is in an upward trend and the Canadian dollar has this cycle of falling tops, and that's really because the US dollar is considered to be the global hegemonic currency, and we are seeing that confirmed by the market action. Now again, probably see Canadian dollar fall into here before it bounces, but I'm worried that we're just building a longer term downward trend that eventually will break that support at 92. Now ultimately what we want to see is a break of that downward trend line to the upside. That would be a cue that the Canadian dollar is going to head back towards par to the US dollar. Gold made a pretty important break to the upside today from a pennant pattern. See how that pennant's been forming over the last little while. A pennant pattern is a process of building confidence, and investors needed to build some confidence after some recent profit taking. But that breakout today is a real strong sign that gold is going to move higher. I would want to be long gold right now. Crude oil has made a bounce off of support. However, it is far from out of the woods. It looks to me now that we are making a little pullback after the bounce. What will be important is whether it makes a rising bottom on this pullback or if it moves down through support. So watch it in the next little while. It looks better than the equity indexes. Unlike some of the stock market indexes, oil is actually trying to build a little bit of a break of this downward trend, but I think it has lots of work to do. I would not want to be long oil here, but I would be looking for an opportunity to go long in the weeks to come. The Nasdaq 100, much like the Dow 30, breaking down from a flag pattern. Again, there's lots of pretty good support in here, and so we may see it bounce in the next couple of days, but there is a real risk that we break through that support and then move lower from there. We've got lots of support to hopefully hold this market up, but the cycle of falling tops that we see here is a sign of pessimism. So I would say that this market is more likely to go lower than higher, and until we can break that downward trend line, I would stay short on this market. The S&P 500 is the chart that probably shows the longer term support the best, and this is our sort of last hope for North American indexes, or at least the US indexes. Because we are falling into support, there is a good chance that we will bounce back tomorrow, that being Tuesday. But again, we've got this cycle of falling tops, this cycle of pessimism. It's got lots of work to do to overcome that pessimism, and I would not want to be long stocks right now, although swing traders might be able to trade that bounce for a couple of days to the upside. Here is the Canadian market index. It looks very different than the US market indexes. Not very exciting by any means, but it is still in an upward trend. We do have a falling top here, which is a concern. But as long as that upward trend line is intact, this market could be a performer in the months to come. And finally, the US dollar, which really is the strongest chart that we see right now. It is in a upward trend that is getting steeper and steeper. That means that there is a motion in the buying of the US dollar. That often ends badly when you get the bubble bursting, but for now, the US dollar is the place to be globally, and until that upward trend line is broken, I would stick with it. Just keep in mind, however, that this is an emotional trend motivated mostly by fear of what's going on in Europe, and if that fear goes away and proven wrong, you will see the US dollar probably make a pretty sharp pullback. Well, that has been the Stockscores market analysis for June 7th, 2010. For more information on the tools and services offered by Stockscores, I encourage you to give us a visit at www.stockscores.com. Have a great week in the market and trade well.